Hi guys, welcome to episode 3, The Gears of Financial World. You know how I have been telling you that anyone can invest in stock market, you do not need formal education for that. It sounds something similar like riding a car. But even for riding a car, you need to know what a brake is, what does an accelerator do, what is a gear, etc. To invest in a company, you should know the financial position of the company. The financial position of the company is reflected in the profit and loss statement, balance sheet, and the cash flow statement. These are somewhat like the gear, accelerator, and brake of the financial world. To start your joyride, you should definitely know about them. So, in this episode, we'll show you how to analyze the profit and loss statement of a company which is engaged in the manufacturing sector. Companies which are engaged in the financial sector or banking sector require a slightly different analysis. So, we will be taking it up separately. We will also show you how to analyze the cash flow statement and balance sheet of a manufacturing company in the subsequent episode. Before jumping onto the main episode, let's reveal the answers of the quiz question from the last episode. The first company to be registered on the Bombay Stock Exchange was DS Prabhudas and Company. Today it is known as DSP and is no longer listed. But it is a very well-known company in the mutual fund sector and has lot many active schemes. The most expensive share in the world is that of Berkshire Hathaway, and the market price of one share is approximately 3.5 lakh US dollar, that is a whooping 2.5 crore Indian rupees. This company is run by the famed investor Mr. Warren Buffett. So now let's jump on to the main episode where Ayush will show you how to analyze profit and loss statement.
Thank you for the introduction, man. Hi guys. So today we'll be understanding how to understand financial statements as a retail investor. First of all, let us understand why is it important to understand financial statements. For me, the very primary reason being it will help us understand some kind of ratios and cash flow statement that will form basis of our investment decision. Not that that will be conclusive, but it will certainly give us confidence. And you know what is the best part of understanding financial statements? The best part is they are made in such a way that once you understand financial statement of a particular company, you can pick up any company ka financial statement and start analyzing it, and you will be able to understand the business very easily. Now I'll be using screener.in to make you understand the financial statements. You can use something like money control or investing.com. Now let us go on to screener.in. Since we want to understand company in manufacturing segment, let us take up automobile segment, and in that let us take up Maruti Suzuki. Jumping directly to profit and loss account. Before we understand profit and loss account line by line, let us first look at few common items between profit and loss and balance sheet. They being this consolidated figure and this standalone figure. This is also common over here in balance sheet, consolidated figure and standalone figure. What is this? See, for all practical investment decision purposes, we will always use consolidated figures. Consolidated figure is nothing but combined figure of all the entities in which the listed company, in our case Maruti Suzuki, would have made their investments. This is nothing but all their investments which will be yielding some kind of profits or losses. So that is aggregated to make this P&L and balance sheet. So standalone will not have that value that the investee company will generate, and hence for our decision making purposes this standalone numbers does not stand a chance to be evaluated. Okay. Now analyzing profit and loss account. First, let us logically understand how would one derive profit or loss of any business. One would obviously take sale, which is revenue from goods sold or services rendered. Okay. After that, there would be corresponding cost. In case of manufacturing, that would be manufacturing cost. In case of trading, that would be cost of purchase of goods, and in case of service sector, major cost would be cost of employees, which would be common also in manufacturing and trading. Apart from that, there will be some kind of legal cost or printing cost, stationery cost, audit cost, etc., etc. There also would be interest cost in case there is some borrowing the company has made. Okay. There would also be tax cost, the tax which the company is liable to pay to the central government. So after all the calculation, you will get net profit, the profit or loss the company has made. And this is the simpler version of the P&L. Now let us look at the actual P&L. As a matter of fact, let me tell you that P&L statements are prepared for a particular period, and in India that period is the financial year. What is financial year? Financial year is 12-month period starting at 1st April of a particular year and ending at 31st March of subsequent year. Hence over here financial year ending March 20 will be starting at 1st April 2019 and ending at 31st March 2020. Now going on and seeing what were the differences in the P&L that we just created and this actual P&L. Okay, there is sales, there is expenses, there is operating profit, but this operating profit is nothing but a derivation of sales and expenses. Okay, we'll see that in detail in coming minutes. Then there is, this is just the percentage, that is some ratio. There is other income, interest, there is depreciation which is new. Yeah, that's it. I mean, more or less the logical P&L that we just saw, that is what is presented over here. Now let us look at each and every line item of the P&L, starting with sales. Sales is nothing but the revenue the company would generate from its core operation. In case of Maruti Suzuki, it will be manufacturing and sale of cars. And as a retail investor, it is of utmost importance to keep a track of sales number of the company in which one is invested. Okay. Over here, it is also important to see the trend or how it is performing year on year. Some years, in some years, the company has not given so much of sales growth, whereas in others, the company has given on an average 15% of growth. And this March 20 may be considered as an exception due to COVID-19. Yes, 15-20 days of March may have this much of an impact. Now, moving on to expenses. Since this is a manufacturing company, majority of the expenses will consist of a material cost and manufacturing cost. Now, one may wonder, Maruti Suzuki would have crores of plant and machinery, then how come manufacturing cost is so low? Here it is important to note that plant and machinery of crores of rupees are to be used over a period of 15, 20, 30 years, and hence a part of it is considered as an expense every year for those 15, 20 years. That is in accounting term called as usable life, and that is termed as depreciation, and hence one may consider this depreciation as manufacturing cost in a manufacturing concern. But as I said earlier, P&L is a standardized thing, but point being that cost of plant and machinery will be covered over here in case of manufacturing concern, and hence this manufacturing cost is hardly 1-2% of some oil or lubricants. Yeah. Then moving on to employee cost and other cost. It is important to note just the trend of it, and as a retail investor, the amount will be less significant when compared to the total revenue. Moving on, there is this operating profit, which is nothing but revenue or sales minus expenses. And as a retail investor, it is also important to keep a track of operating profit, because operating profit indicates the profit from core business activities of the company. So in case of Maruti, it is essentially saying that on selling a car of 100 rupees, the company has made 15 rupees over here, 13 rupees over here, 10 rupees over here. So as a retail investor, you will always want to invest in a company where the company is at least operationally profitable. Matlab, you will not want to invest in a company where the company makes a car for 110 and sells it for 100 rupees, right? So this operating profit is also very important, and as a retail investor, you should keep a track of that. Moving on to other items like other income, interest, depreciation. For retail investor point of view, these are very insignificant, and hence one may choose to avoid it unless you find some bigger amount in particular year, then you would need to find out answers for that, because that is definitely going to impact the stock price. Same is the case with the tax percentages. Here it is given as percentage, but whenever there is some policy change, it is definitely going to impact the financials of the company as well as the stock price of the company. And finally, you derive the net profit, that is nothing but the profit attributable to equity shareholders of the company. In our case, it is the profit attributable to Isha and Bill. Remember, with this we complete our basic understanding of profit and loss account. We can have a look at the balance sheet in next video.
Hope you have noted all the important points and have understood how to analyze a profit and loss statement. So with this, we wrap up our episode today. Please like the video, share it with your friends, subscribe to the channel, and give us your thoughts in the comment section below. Thank you.